Hey VV Nation, welcome back. So last week I did a video talking about the bull and bear markets and what it takes to exactly go into the bull and bear markets. If you haven't checked it out, click on the link down below, watch that first before you watch today's video. So after I posted that video, after we've got a lot of people watching it, comments back on it, the feedback I've got has been absolutely outstanding. I love interacting with you guys, but it did bring up some things that I've been thinking about over the long weekend and things that I've thought about that I want to point out here today on my final thoughts on the overall market, what's going on currently, and where we're at. So as I stated last week, we are still in a bull market scenario, but we're in the later stages of that bull market. Now, a lot of confusion came, it seemed like, around people thinking, oh, but the markets are going to be crashing soon, or we're going to have a correction. And yes, I do think that we could possibly see a market correction in the very near future. In fact, for anybody who's been tuning in on our Thursday live streams or our Jockey Club, or anybody who's been really following VectorVest, you know my thoughts on this. So you may be familiar with what I'm going to say, but for anybody that's tuning in for the first time or non-VectorVest users, this is really directed at you to not only help you be more prepared for what's going on in the market, but also see how powerful VectorVest can be. So as you can see right above me over there we go, I've got our VectorVest color guard. Now there's a few indicators in the color guard that help us identify when the markets are starting to look for a top on a short-term basis and also when they're starting to look for a bottom on a short-term basis. So I've been going over this on a weekly basis over on our live stream, but essentially if we look down here, we get the MTI. Now the MTI stands for the market timing indicator. It's cast on a scale of 0 to 2 to keep it simple for you guys out there. Now, when the MTI gets to a level of 0.6 or below, that generally shows the market starting to look for a bottom. Doesn't mean once we hit that level, we're going to instantly bounce back, just like if any technical traders out there are familiar with stochastics or RSI. Just because we hit oversold levels does not mean the market's going to reverse and shoot higher. Now, a while back, we did get to those overbought territories of 1.5 to 1.6, and we've been slowly seeing the MTI moving its way down to 1, and now slowly moving its way down to that 0.6 threshold. So on a short-term basis, yes, we're slowly seeing the market bleeding out a little bit, giving back some of those gains. And while it may not be affecting specifically the SPY or the NASDAQ right now, those are only small areas of the market. So keep that in mind as you go through this. The whole entire market is not just small indices or the major 3 indices. There are a lot more stocks out there than just that. So when looking at it here on a short-term basis, we still have room to fall. Now, anybody who's been following our YouTube channel for a while are probably familiar with the one chart that I've talked about for quite a while, which is something that we've been looking at the NASDAQ, the S&P, the Dow, and the Russell, but utilizing their ETFs to do some technical analysis on. Well, let's go ahead and pull those graphs up real quick, and we'll get started on the Russell, because the Russell was really where we first started looking at things. Now, the Russell is more of a forward-looking indice in the sense that it shows the risk appetite of the overall investor out there and can give you a good indication of which way the market's heading. It typically starts showing signs of weakness or strength before we notice them in the Dow, the NASDAQ, or the S&P. So going back into it, we were talking about the head and shoulders we noticed here with the Russell a few months ago. I believe it was about 2 or 3 months ago at this point. And we never really saw a breakout of that head and shoulders pattern. We tried to break out of the upside, but failed to do so, and then have really just been trading in a sideways action ever since then. Well, now that we've had some time, we've had more data to really analyze, we start to see a trend here emerging that we want to bring to everybody's attention. We saw the highs on the Russell all the way back here on the 15th of March. Well, since that point, we've been hitting lower highs, but also higher lows up until just recently. Just trading sideways more so than anything else. So starting to see some weakness coming out of the Russell. Now, let's get into the other 3 major indices. If we go up, we'll go to the NASDAQ. And one of the things I've been talking about, especially during our live streams, during our Jockey Club, is a pattern known as a bearish divergence. A bearish divergence is an extremely strong technical pattern. It's one of my personal favorite patterns to use. And whenever you can identify them, in my personal experience, about 75% of the time, they tend to come true. So starting off looking at the NASDAQ here. With the NASDAQ, as we all know, the price just continues to go higher. The NASDAQ continues to pump, moving higher and higher and higher, and barely ever having any sort of a pullback. Well, looking at the chart here, we have DPO, which is a momentum indicator. Then we have stochastics, and then we have MACD down at the very bottom. And one of the things we want to point out here is, we can see as the price has been moving higher, the DPO has been steadily dropping and still hasn't broken that downtrend yet. Now with bearish divergences, for anybody who's not familiar with them, to give you just a good general idea of what to use them for, bearish divergences suggest that downside risk outweighs upside potential. And the longer that bearish divergence is created, the bigger the drop or the bigger the pain factor is going to be when we see the breakout to the downside. So while we have this bearish divergence created, it could still continue to go on for who knows how long. That's why we don't try to predict what the market's going to do in the VectorVest system. We simply follow the trend and let the trend be our friend. Well, here's a trend we're noticing with the NASDAQ. If we go on to the S&P, same situation. As we all know, the S&P barely has more than 3 days to the downside ever, and then it continues to go higher. Well, that's great, but eventually you do have to have sell-offs or pullbacks in the market to create healthy markets and to create good buying opportunities for new investors to get on board with. Well, we definitely have not had that really all year round. So looking at it once again though, getting into it, we can see the prices of SPYs continue to move higher, just actually hitting a new high here today. But look at the DPO, that momentum indicator. The momentum indicator continues to hit lower highs and lower lows, showing less and less momentum to the upside as price continues to chug higher. This is clearly a warning sign to anybody out there who's new to the markets, or maybe you've been out in the markets for a long time. Still, this is something that you definitely want to pay attention to. But once again, let me just reiterate, you never try to predict that trend or when it's going to break. So while we can see these bearish divergences continue to grow, wait until you see actual confirmation that they break out to the downside or they break below a support line or a trend line, and use that as your entry to get on board with these to take advantage of that sell-off. So what kind of trend lines could you use? Well, let me just go ahead, open this up here. I'm going to take off the fill mode so that way we can use our trend lines here. And we'll just go ahead and add a freehand line for now. Well, if you're looking at the S&P, for example, we have these higher lows clearly ever since around the beginning of May. So a trend line would be a nice place to go right at those lows. If we break below that trend line and we don't see new highs starting to form with the DPO, that shows that the bearish divergence is still intact, and the breakdown of that higher low trend line would be your entry to jump on board, take advantage of these major indices if they have that correction. Because once again, the longer they go higher, the bigger the bearish divergence, the more pain that's going to hit the markets. And now for the last one, taking a quick look at the Dow. We can see steadily moving higher, but DPO steadily moving lower. Once again, just showing momentum is waning as price continues to climb. Now, this isn't saying that, this is going to be the start of the bear market or that the market's about to crash. No, this all goes hand in hand. In an up market, you will have sell-offs. You will have corrections. Once again, they're healthy. They're an important factor in the market. Without healthy corrections, you would never have a good buy opportunity to jump on board. Therefore, you wouldn't really have the market the way it works now. So while we are seeing some weakness with the major indices, we could see a sell-off coming into the market. I still stand by the bull bear market idea that we were talking about last week, that we still remain in the bull market. So once this sell-off or correction actually occurs, get ready to buy the dip, because that may be the last opportunity we see before we go into that bear market. So hopefully this helps shed some light into everybody who is curious about that. I know I've gotten a lot of feedback asking these kind of questions, And I just wanted to get those thoughts out there for everybody who tunes in, because if somebody's asking it, I know there's got to be more than that person that's curious about it as well. So if you've liked today's video, if you found this helpful, make sure as always smash that like button, hit that subscribe button, and if you want to stay up to date with where the market is by utilizing the MTI or the overall bull and bear markets, make sure to subscribe to VectorVest down below using the link to sign up for that free trial, and that way you can make sure that you never get caught off guard with where we're at in the markets. So until next time, take care, adios, toodles.